news, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. Stocks holding close to session highs. Big rally for the Dow, the S&P, and NASDAQ. And this update is brought to you by BNY Mellon Insight, June 6th through the 8th in Orlando. Don't miss the essential event for the financial advice community. Visit insight.bnymellon.com. S&P right now up 67 to 4288, closing in on 3,300, a gain today of 1.6%. We've got the Dow up 732 points. That is a gain of 2.2%. NASDAQ, the laggard, it's all relative. We've got NASDAQ up 151 points now. That is a gain of 1.2%. The 10-year yield, 3.68%. The 2-year, 4.49%. Former Treasury Secretary Larry Summers says in an interview with Bloomberg's David Weston, the Federal Reserve should be open to raising rates by half a percentage point in July if it opts to hold off from tightening credit this month.
I think we're again in a situation where the risks of overheating the economy are the primary risks that the Fed needs to be mindful of.
And to hear the full interview with Larry Summers, tune into Bloomberg Wall Street Week tonight, 6 p.m. here on Bloomberg Radio. 10-year yield, 3.68%. Spot gold down 1.4% to $19.50 the ounce. And West Texas Intermediate crude up 2.8%, $72.05 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week on Bloomberg Radio, on Bloomberg Originals, and on YouTube. Carol Massar along with Matt Miller. We've been talking about this morning's Labor Department report, mixed in terms of non-farm payrolls coming in really strong, but the unemployment rate, rising to 3.7%. Wage growth also was, yeah, why did my notes? I don't know. For some reason, my notes were weird. It was a lot of moving parts that didn't necessarily paint a clear picture.
It was, I think Julia Coronado called it a squirrely report, right? And
we've had a few of those.
As we've been talking about, the household survey and the establishment survey go in completely different directions. So it's hard to really get a grasp on what is happening with this labor market. Is it just bursting at the seams with growth, or is it starting to finally shrivel up under intense interest rate hikes?
Which is why we rely on people like Julia Pollack.
Exactly.
She's chief economist at ZipRecruiter. She's on Zoom from Los Angeles. Julia, hey, good to have you back with us. It is a little bit confusing, safe to say. And as Matt said, he's been talking about the two different surveys, and we've gotten different reports from that monthly labor report.
And even anecdotally, we hear about
We
hear about big tech companies firing people all the time. I know a ton of 20-something-year-old kids that are looking for a job, and they say it's not easy. We had a story about a Harvard grad who sent out 100 resumes before she got a job.
Correct.
At the same time, 14 months in a row, we've beaten the estimate with non-farm payrolls. So what is going on?
Well, first, the good. The establishment survey was extremely strong. Job growth was very, very broad-based. And the economy seems to be adding not just low-wage leisure and hospitality jobs, but high-wage jobs in professional and business services. There were even job gains in the most unlikely places, like construction, which we know has been hit hard by the housing downturn and high interest rates, and in transportation and warehousing, where recently businesses are reporting a freight recession, they're calling it. Truckers can't find loads to drive. So that was sort of the surprising positive in this report that was extraordinarily positive. Even within the establishment survey, though, there are some worrying signs.
So I'm sorry, I interrupted. Please continue.
No, I was just saying that even the establishment survey is not a slam dunk. Wage growth cooled, working hours shrank. And then the two sectors that we know are having the most trouble, information and manufacturing, continued to post job losses. And I don't think we're at the end of those yet. The manufacturing reports that came out this week showed a steep drop in new orders, and that suggests that further job losses are coming down the pike because new activity is slowing up.
So, okay, so it was an extraordinarily strong report, but with some weakness in it. And then when you look at the household survey, 313,000 jobless claims and 440,000 job seekers, and an unemployment rate that rose from 3.4% to 3.7%. Even worse, if you look at, for example, black employment was at a record low of, I think, 4.7% and has, or 4.6%, and has risen to 5.7%. That seems to be worrying.
It is worrying, and what past research shows is that the household survey tends to be more sensitive when the economy is entering a downturn. At sort of turning points, the establishment survey can get it wrong because its birth and death model doesn't sort of capture the fact that businesses are closing. The household survey, those ratios, the labor force participation ratio and the employment rates for different population groups, those don't typically change. They're very sort of revealing. And that increase in the unemployment rate is very large. It puts it in the sort of top 10% of any of increases we've ever seen. It is concerning, and it's not just driven by good news for good reasons, like increased participation. That maybe explains about 30% of the increase. It's also driven by bad news, by an uptick in job losses.
So is there any kind of net takeaway from this morning's release?
I think the net takeaway is that the truth is probably softer than these blockbuster top-line numbers would suggest. Many labor market indicators have come all the way back to their pre-pandemic levels. Job switching is all the way back, according to the household survey. The quits rate in the JOLTS report also came pretty much all the way back to where it was before the pandemic. That's not really consistent with more than 10 million job openings and continued blockbuster job gains like this. It's more consistent with sort of the kinds of gains we saw before the pandemic, 180,000, 190,000 jobs a month, and that's probably where we're headed, if we manage to avoid a steeper downturn in tech and manufacturing and the cascading downturn.
So you mentioned information as one of the sectors that is losing. I guess, do you mean IT, information technology? Is that, the Microsofts and the Facebooks of the world?
So the information sector contains a bunch of things in it. Tech, so software publishing, but also the media. And often the two go together because the tech sector uses advertising to expand its sales, which really depend on network effects. And all of the industries that rely on advertising spending then get hit when tech is sort of in the crosshairs.
No, but you can see, if you can see from the household sector, essentially, that we're at a turning point, that we're ahead of a downturn. Can you see also from the data which industries are going to be, losing the most jobs? Where are we going to see the most firings?
So that's hard to know now because this downturn is so different from what we usually see. This is more of a white-collar recession than past downturns have been, to the extent that there is a slowdown, right? This is still a very, very strong labor market. But the weakness is not popping up where it usually does. That said, the interest rate sensitive industries are very vulnerable. And unless mortgage rates come down and there's an uptick in housing, we will likely see a downturn in construction employment soon. And manufacturing could still have quite a long way to go. Many retailers have reported in their earnings calls the last few weeks that they've seen much more softening in demand in the first few months of the year than they had expected. Yeah. And that is going to reduce their orders going forward.
Hey, Julie, you've just got about a minute and a half or so left here. One of the reasons we like to talk with you is, we get data points, certainly from private firms, we get it from the government. You guys are an employment marketplace, right? So you are seeing things in real time. Tell us what you are seeing on the platform in terms of demand for jobs, openings, and what it tells you.
Right. So we see that job postings are still above their pre-pandemic level, but that they've softened a lot more than the official job openings report from the Labor Department suggests. Job openings are down 16% from their peak in the JOLTS report from the Labor Department, but about 36% down from their peak online across the web. And job seekers are noticing a change in the dynamics, and they're starting to feel a bit more nervous about the outlook.
So what does that mean? That people are probably less likely leaving jobs for new jobs? Are they more willing to go into the office rather than work from home? I'm just curious what that means.
Right, and so one reason for the discrepancy between the payroll number and the employment level number is because the household survey captures gig employment, and gig workers have been losing jobs the last few months, or shifting from gig work into payroll work. So there does seem to be a shift happening where workers are prioritizing security increasingly over flexibility.
All right, we're going to leave it on that note. Julia, thank you so much. Julia Pollack, she's chief economist over at ZipRecruiter on Zoom from Los Angeles, breaking down what they are seeing on their platform and how it kind of meshes with what we're seeing in the monthly jobs report. You seem worked up.
I feel like I've found an answer, essentially. I was worried about the discrepancy all day, or I was thinking about it and talking about it all day. But I think Julie's explanation is great, that before a downturn, for example, the household survey is more sensitive and shows you what's happening. It kind of shines the light in the right direction.
So you have to kind of look at the cycles and kind of where we are. All right, let's get off to world and national news. Nancy Lyons in our 99.1 newsroom in Washington. Hey, Nance.
Hey, Carol. Officials in Davenport, Iowa say the search for survivors at the site of a partially collapsed building has ended despite 3 people still being unaccounted for. Chief Rick Halloran is head of the task force that's been working at the site.
We are continuing to work with on-site commanders to provide search and rescue recovery capabilities in accordance with their needs.
Halloran says they'll now work to shore up the structure since it still poses a danger to recovery teams. The search has been complicated by the fact the unstable building keeps shifting. A little-known respiratory virus is showing up in more patients, with 1 in 5 of them showing signs of the disease.
It's called human metapneumovirus and is an obscure cousin of RSV. It can cause infections like bronchitis or pneumonia that can be severe in children and the elderly. At least 5 companies are working on treatments and vaccines, some in combination with shots against RSV. Pandemic lockdowns stopped the spread of respiratory viruses that typically spread during the winter and spring seasons, and companies have been focusing more on corresponding vaccines since then. In Washington, I'm Amy Morris, Bloomberg Radio.
No charges will be filed against former Vice President Mike Pence for his mishandling of classified documents. A person familiar with the matter tells Bloomberg the Justice Department has sent a letter to Pence saying that he has been cleared. The Pence review is launched after the Justice Department opened formal investigations into how former President Trump and President Biden handled documents with classified markings. Congressional leaders are extending an invitation to Indian Prime Minister Narendra Modi to address a joint session of Congress during a visit to Washington later this month. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long at Bloomberg with the Dow, the S&P, and NASDAQ all trading very close to session highs. Lots of moving parts today, but the bottom line, we've got stocks rallying. So let's head right over to the First Word breaking news desk for today's afternoon call. And here he is, Bailey Lipschultz.
Good afternoon, Charlie. As you said, stocks are trading higher with the S&P 500 on the doorstep of re-entering a bull market. The Dow is up 710 points, S&P higher by 65, with the NASDAQ gaining 130 points. The U.S. 10-year yield is at 3.69%, and small caps are higher by 4%. All 11 main S&P sectors are trading higher, led by gains in materials and energy, while communication services and tech are the only groups up less than 1%. NASDAQ biotechs are up 65 points. Transports rise 300. Semis are down 5 points, while the VIX is lower by 6% to the lowest since July 2021. Leaders in the Dow, 3M, Caterpillar, and Dow Inc., while Verizon and Salesforce are the only stocks trading in the red. Telecom stocks, Verizon, T-Mobile, and AT&T sank after Bloomberg reported that Amazon has been in talks about a low-cost or free mobile phone service. 3M jumped more than 11% after a report it struck a tentative pollution settlement of at least $10 billion. And on the earnings front, Cooper Co. fell after second quarter earnings fell short, and PagerDuty sank 17% after cutting its full-year forecast. Wrapping things up, Lululemon jumped 12% after its result beat analyst estimates. Live from the First Word breaking news desk, I'm Bailey Lipschultz. Charlie?
Okay, we thank you very much, Bailey. Have a great weekend, and to hear live breaking news over your Bloomberg-type squawk, SQUA on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, just about 18 minutes, 17 minutes or so until the closing bell rings on Wall Street. We are all so ready to get this over. Time for the drive to the close, right?
Really? You're just done with this week, huh?
I am. Aren't you?
I'm with you.
I'm kind of like done.
I'm with you. It was an exciting day, though.
It was an exciting day, and I think our next guest is kind of done with this week, too. We welcome back Brenda O'Connor-Wanis. She is Senior VP and Financial Advisor at UBS Global Wealth Management, back in our Bloomberg Interactive Broker studio. It is really great to have you back. We kidded because you and I were talking before we got going, but it's been kind of another packed week for just 4 days of trading. Rally makes sense to you? I mean, we certainly have seen it broaden out in a big way.
Right. So, I mean, look at these jobs numbers. I don't think anyone was expecting something with a 3 handle. So, the markets were certainly surprised. But look at what the markets did, right? It wasn't concerned with that headline number, nor was it as concerned with the 10 million openings from earlier this week. It was all the numbers that are nuanced under the hood. So, wage growth, the unemployment number went up to 3.7. You have fewer people quitting. I also look at the fact that, not too long ago, there were 2 job openings for every unemployed American. That's come down to 1.6. So I think the market is really paying attention to those nuanced numbers. I would also say this.
The nuances matter.
Exactly.
Sorry,
here's the other thing, though. The Fed has done an incredibly good job in prepping the market this week. They have really informed the market in a way to let them know that June is going to be paused. And so I think investors looking at today's payrolls numbers were less interested in knowing what the June guidance was going to be because the Fed did its own communicating.
So the CPI number doesn't matter as much.
Yeah, so help us understand this, because if you're data dependent, I would think something like that would matter to the Fed.
Right. Okay. So let's take a step back and look at the Fed. It wasn't that long ago that the market was pricing in a pause in June and 4 rate cuts into the back half of the year. I think that scenario has been wiped off the board. I think realistically, we're going to look at a pause in June, a hike
in July.
We're still
seeing the market pricing in, I think, some cuts still.
Yeah,
bit,
and
right?
maybe 1 hike. hike, I think, if we're lucky, at the end of the year. And again, it's all the other data. You know, you have a PCE annualizing at 5%, you have personal spending up, you have housing starting to stabilize. So I think the bottom line here is that the calculus for the Fed is not as clear as it was, 2, 3, 5 weeks ago. I think that, that's for us anyways, is supporting our positioning of more conservative, fixed income over equities.
You wouldn't buy into this rally?
I wouldn't buy into this rally. And I think that there are certain things that you can do on the periphery. Look at what tech is doing. Look at what the NASDAQ has done, up 27% this year. I think that tactically you could kind of reweight that, take some cash off the table, move into more value-oriented parts of the tech market. But with my marginal dollar, I wouldn't be going into U.S. equities. I may look at non-U.S. equities, but not U.S. equities.
So let me just quickly ask about the market pricing of hikes and cuts, because we rely so much on the world interest rate probability screen on the Bloomberg terminal, which shows what swaps traders are doing, but you don't really believe that the Fed is going to cut twice by the year end. That's what the screen shows me.
Yeah, I mean, for us, we think that there's probably one hike towards the end of the year. I obviously
one hike.
One cut, sorry, my apologies. One cut towards the end of the year. I think that you just have to, I think the market's trying to be hopeful. I think the market.
But wouldn't we have to be in a pretty bad place for Jerome Powell to cut rates? I mean, this is a guy who seems fixated on not repeating the Arthur Burns mistakes, who wants to be kind of the new Paul Volcker. If he has to cut rates, that means something big has broken in an irreparable maybe way.
Right, but look at the other data. Like GDP is at 1%. We are not that far away from having a really soft economy where you're at flat or slightly negative numbers.
Fair.
So I don't think that that's far away, but I do think that the market is grappling and trying to hold on to this narrative where the market will heat up as inflation cools, and we just have not seen that yet. So,
Brenda, what do you see when it comes to earnings and earnings projections? Because I feel like when it comes down to it, we could debate Fed policy forever and ever and ever, and ultimately the Fed's going to do what it's going to do. But when you look at what companies are saying coming off of the earnings season and what we're expecting for earnings, that's real stuff that we can potentially grab onto.
Right, and no one expected this earnings season to be as strong as it was. I think going forward, what we're looking towards is the fact that tightening lending standards is going to work its way through the earnings. So we think that in terms of EPS, we're going to come in at 210 towards the end of the year. Our core scenario is still 3,800 on the S&P, which is really far from where we were, especially on today. So,
well, what do you make of us? We went below 42, and then we're back up above it. We're almost, Matt, 20% off that mid-October 2022 low. So
20% above it.
Yeah, I mean, forgive me, 20% above it. So significant.
Yeah, I mean, our ambitious scenario on the S&P based on our UBS data is 4,400. We're basically there. So I think this is a really stretched market. You have 18.3 times forward PEs on the S&P. You do not see those kinds of valuations unless you are expecting aggressive growth or a 2-year under 2%. And frankly, we're just not there.
I look at Bloomberg Intelligence to see consensus for earnings, and we were off 3% for the S&P in Q1, which isn't so bad as you point out. We are looking for a drop of 8% in Q2, which is going to be a little bit more harsh for this kind of market to deal with, especially at these highs. I mean, we're almost back to the August 2022 high.
Right, and again, that's reflected in what our EPS target is towards the end of the year. So I don't think what we're seeing in the green on the screen today is, again, necessarily the narrative that we can extend out to the back half of the year. Look, S&P's at 10. We have our 11. NASDAQ is at 27. I just have a really difficult time transporting this incredibly bullish narrative into the back half of the year.
You're definitely not alone in it. There are a lot of people skeptical of what's going on here. Brenda, thank you so much.
Thank you.
We really appreciate it. Brenda O'Connor Wanas, she is Senior Vice President and Financial Advisor at UBS Global Wealth Management, back here in our Bloomberg Interactive Brokers studio. And Matt, we've just got, about 11 minutes to go here, but we're holding on to our highs of the session. So, I doubt that we're going to see any kind of selling as we go into the close.
It's pretty fascinating because you would think that people would want to take some profits off the table into the weekend. But I think
interesting.
I think Brenda's point is right. The Fed has guided so well that nobody's worried, and they're ready to hold risk assets into Saturday.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Sources say Amazon.com has been talking with wireless carriers about offering low-cost or possibly free nationwide mobile phone service to Prime subscribers. The company is said to be negotiating with Verizon, T-Mobile, and Dish Network to get the lowest possible wholesale prices. That would let it offer Prime members wireless plans for $10 a month or possibly for free and bolster loyalty among its biggest spending customers. Amazon shares today, they are up by just about 1.3%. T-Mobile is down 6.4%. Verizon shares up 1.1%. Shares of Dish Network surging now by 16.4%. Ella Irwin, the Twitter executive in charge of content moderation and policy, has resigned. And with more, here's Bloomberg's Steve Rappaport.
Charlie, it leaves new owner Elon Musk without one of his most loyal lieutenants. As head of trust and safety, Irwin helped oversee Twitter's policies on harassment, hate speech, and violent content, rules which were relaxed under Musk. She was also heavily involved in account suspensions and would frequently respond to Twitter users whose accounts were blocked. Current and former employees say Irwin was one of Musk's most trusted executives, willing to carry out and defend his decisions on content as the team's efforts became strained with layoffs and firings. Charlie?
And that's Steve Rappaport reporting. We've got just 5 minutes to go ahead of the closing bell. Stocks are rallying. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week on this Friday. Carol Masser along with Matt Miller. Forgive me as I adjust my mic and make a little bit of noise here. Just a few minutes, and we're going to head over to Scarlett and Romaine, count you down to the close on this Friday. In the meantime, let's see what's on everybody's radar, some of the stories that definitely caught our attention on this Friday. And among them, I'm looking at a story, about, I thought this was interesting, about Jamie Dimon planning to visit Taiwan after visiting, which was a very closely watched, closely followed, closely reported on trip to China. So for me, I read it and I'm like, especially with after the interview our Stephen Engel did with Jamie Dimon about, could politics be once again in his future? Well, it feels very political to me.
It does, but I think with Jamie, it probably is less so. He met with a very senior Chinese official on the Communist Party, whatever their sort of top executive board is. They didn't disclose the name, I think, so we don't know who, but we know he's met with incredibly powerful people inside the Chinese Communist Party. And surely they knew when he met with them that he was heading to Taiwan. But he's the third, at least the third major U.S. CEO to go to Taiwan. Remember, we were talking so much last week about Jensen Huang from NVIDIA. He went to Taiwan and explained all of the ways we're going to be using AI, or they're going to be using AI in his business. He said, it's too much. I know it's too much.
I just think it's interesting. He's also going to go to Hong Kong and South Korea. So he's definitely making an Asian tour, if you will. And they do have workers throughout the region. So some of that is, and they have customers and clients. And it's an important market for them. But I just find it's interesting.
It's huge, especially when Wall Street is worried about not having enough exposure to the chip sector. If you want to have exposure to the chip sector, Taiwan's definitely a good place to go because they have the world's largest manufacturer of microchips, TSMC, the Taiwan Semiconductor Manufacturing Corporation.
And, bottom line on all of this and all of these very high-profile executives, whether it's Tim Cook, whether it's Elon Musk, these visits in and around China specifically, showing their commitment to that country. We're going to talk a little bit more about Apple later in terms of its retail expansion and its commitment still to China, even as it expands its retail footprint. They're not stepping away, despite the tensions between the U.S. and China.
No, absolutely not.
It's not happening. All right, everybody, we're getting ready, thank God, to wrap up the trading day and week. Just a few minutes right now, Beyond the Bell. It starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlett Fu. We're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast with Carol Masser and Matt Miller. Welcome to our audiences across Bloomberg Television, Radio Originals, and our partnership with YouTube. Looking right now at a Dow Industrial Average having its best day of the year, Carol Masser. A Russell 2000 having its best day of the year, Carol Masser. And the S&P 500 at one point today flirting with the potential technical bull market.
It's amazing how close, right, from that kind of mid-October low of last year, almost that 20% bump to the upside on the S&P. I thought it was really fascinating when we talked earlier, guys, about Caterpillar, 3M. It's not your big tech names. It's not your AI names that are really kind of leading the way on this Friday. It's a much more broadening out of the gains in kind of your old core economy types of companies.
It's as if the market was listening to us on the closed simulcast yesterday when we said, either the rest of the market has to catch up with big tech or big tech has to come back down. Well, it looks like the former is happening. We are seeing, look, the Dow Jones, as a great example, is the biggest gainer of the three major indexes. You have the S&P in the middle there and the NASDAQ bringing up the rear, only up 1% compared to the Dow's 2%. So it's those big old economy companies that are putting up the big gains today.
Yeah, I'm also looking at the S&P 500 volume in the index and in SPY, the ETF that tracks the S&P S&P 500 is higher than the 10-day average. For the Russell 2000, pretty much in line, just a little bit lower. And I'm curious as well about the QQQ, or the NASDAQ 100, because that's the laggard on the day.
Oh, let's walk you through the closing bells here, because there is a lot to talk about here on this Friday afternoon. A Dow Jones Industrial Average up almost 700 points, up about 2% on the day. We'll double check these numbers, but that appears to be the best day of the year. The S&P 500 higher by 61 points, up 1.5%, right around 4,282, and that is right around up about 19.5% from that October low, so on the verge of a technical bull market. The NASDAQ 100 higher by 140 points, or 1% on the day. The NASDAQ 100 up about 0.7%. Those are your laggards, and I want to turn your attention right now to the Russell 2000. It is closing out the day higher by 63 points, or 3.6% here. The differential between the Russell 2000 and the NASDAQ 100, the widest to the upside for the Russell that we've seen going back to March of 2021.
All right, well, something that certainly has been on our radar over the last couple of weeks as we watch those debt negotiations out of D.C., and that is the amount of money the U.S. government has to pay its bills, plunging to the lowest level in more than 7 years, just as Congress passed that legislation that suspends the statutory borrowing limit until 2025. So again, U.S. cash pile dropping to 22.8 almost 23 billion, matching the low last seen in 2015. So it's something we've talked about.
And we should just point out too, I mean, President Biden is scheduled to sign that bill tomorrow. He's supposed to address the nation. So in theory, this should now start to right-size itself within the next few weeks.
Take a look at the groups that are gaining. I mean, obviously, all of them are up here if you break down the S&P 500 into 11 industry groups. But the materials, industrials, and energy companies are the biggest gainers here. Only communication services seems unchanged, and that's, of course, like social media and streaming services down there. So it really was a broad-based rally today, and I think the best week since March 31st, so the best week in the second quarter thus far.
All right, folks, let's get to some of the individual gainers on this Friday. There were a lot to choose from, so lucky me. Dish Network, #1 in the S&P 500. Folks, at its highs today, up 25%. Finishing the day, though, not quite at that level, but still with about a 16% gain. Bloomberg exclusive that Amazon is in talks to offer mobile services to U.S. Prime members, said to be talking with Verizon, T-Mobile, and Dish. We know some sources have come out and said, I think AT&T and Verizon have said to Dow Jones that they're not, that's not what's happening. But nonetheless, Dish getting quite a pop in today's session. Lululemon, let's go there. It is #1 in the NASDAQ 100, a gain of about 11% in today's session, but it was up as much as about 18%. This is after reporting first quarter net revenue that beat estimates. We broke those results last night. Analysts were a little nervous that they weren't going to be so good, so they were better than feared. And it also talked about some of the growth that that company is seeing in China. And then Broadcom, we also broke that down last night. Turns out NVIDIA, not the only chip maker that is benefiting from the AI frenzy. That stock, Scarlett, up about 2.8% in today's session. It is now up about 40% so far in 2023.
Yeah, kind of notable given that the other AI adjacent names are falling today. Okay, let's take a look at losers on the heels of what you were just saying, Carol. Verizon falling as much as 5.6% to the lowest in almost 6 years. Bloomberg Intelligence says that if Amazon does come out with this wireless offer, that perhaps we'll see more market share, taking up more market share. The legacy carriers have already lost share to cable providers who have entered the market with $30 a month plans. So just imagine what that means for these guys. And Cooper, which is a contact lens maker, down 4.75%. Quarterly earnings beat. I should say it increased its forecast, and that was solid, but not good enough. And PagerDuty is one of the biggest losers in the the Russell 2000. There we go. It's a San Francisco-based enterprise software company. It cut its forecast, saying the worsening economy has led to its customers turning more cautious in their spending, reducing deal sizes, and dragging their feet on making purchases. And
is that like Beeper King?
No, it's not. It's an enterprise software company.
Yeah, so I
It's
guess
moved on from that.
So I guess as we focus here so much here on the big run that we had in the market here, of course, potentially on the verge of a bull market for the S&P 500, we kind of ignored the fact that you had a huge spike in yields. In fact, the entire Treasury curve shifting higher here on this Friday, and that was largely because of that labor market report. And now the expectations about what the Fed does next: 16 basis points higher on a 2-year, 10 basis points higher on a 10, 7 on a 20, and about 7 on a 30-year yield right now. Now, of course, this has kind of been oscillating. Remember, we just came off of a big sell-off, a big rally in that space here. So seeing that peel back here on this Friday just kind of puts us back to square one, but still interesting moves here as to what the bond market now is pricing in versus what the equity market, guys, is pricing in.
It absolutely adds also to the competition to equities, right? You can imagine with 2-year yields at more than 4.5% again that investors, especially mom and pops, are going to say, why don't I just park my money in this relatively risk-free asset and earn 4.5% than mess with stocks that are flirting with a bull market again for seemingly no real reason other than AI, which what is that even?
Yeah, but we'll see whether or not the broadening out of the market trade, certainly on the equity side of things that we saw today, does it continue into next week? I am curious, now that we've kind of, Scarlett, crossed off, the debt ceiling and that, we expect, of course, the president to sign it. Like, what is the next focal point and what is the next kind of worry point, if you will?
Yeah, well, the jobs report is over, so we do have some data coming up, but we're in that quiet period where earnings is largely over as well. So I'm guessing Fed speak will dominate.
Well, don't forget, I mean, actually, the Fed members are going to a quiet period starting at the end of today. So, unless they speak before midnight, that's pretty much it until we get that meeting in a couple of weeks.
They've kind of said a lot, don't you think?
They've already told us what they're going to do, right?
Yeah.
Everybody on the street except for Priya Misra knows that they're going to hold.
Yeah, we just had a market conversation. Our guest said basically that's what the Fed did, right? The officials were out there in full force and basically delivered to the market. Folks were going to pause at this point, and that's why you're seeing the trade.
It raises a question, though, too.
She doesn't buy it, by the way.
Yeah. It raises a question, though, too, about the catalyst, right? And I'm curious as to whether not having earnings, not having major eco data, not having Fed speaks, does that actually work in the market's favor, where basically, hey, they can just kind of run wild, or do you think it can maybe has the opposite effect, a dampening effect?
It depends on how many companies come out and say they're doing something with AI.
Okay.
We've seen run wild today.
All said that? What if Jay Powell came out?
Everybody's up except for Beeper King.
What would that do for the market?
I'm willing to bet that someone will say that's a better way of running monetary policy.
By AI?
Scarlett, don't you remember the Beeper King, Dennis Duffy?
The Beeper King, Dennis Duffy?
Yeah.
Is this a blast from the past?
Well, you bring up PagerDuty.
I'm going to be hearing about this for the next 60 minutes, aren't I?
PagerDuty is not a company that sells pagers.
No, I don't know. We were talking about earnings estimates, right, Matt, in our last segment, and they've been coming down. So, I've got to go back to fundamentals and what do we hear maybe from companies? You're right. We're out of the earnings season, Romaine, so I don't know what we trade on. And do we get a little lost?
Well, we're going to get right back into it.
I will say this, though. We talk so much about how we've had these rallies, and this is the strongest that we've had in some time, and broadest, I should say. But there's always a question about sustainability. But I did think it was interesting to see the VIX go back down below 15 here, a pretty meaningful move lower here on a points basis. Even some of the other volatility metrics have tamped down as well. And while the yield space is kind of all over the place here, it does kind of give you the sense here that investors, the mindset, at least based on what we can view by the price action, is a lot more bullish than what it was even just a couple of weeks ago.
Yeah, and does it matter, though, that to some extent, if you look at some of the technicals, certainly on the S&P 500, we're close to overbought, or, so do we see a little bit of
the NASDAQ 100 is like a 75
Things can remain overbought for a very long time.
And that's been overbought. Right. But that can change, too, because think about it. You talk about, even if you go to the NASDAQ 100 and you look at in an aggregate, an overbought level, but going in some of the individual members here, you still have a lot of names in there that, in theory, probably have a little bit more of a value proposition to them than you would think.
We need the dartboard or something for next week, right, to get us through. Or we need bunny, or rabbit,
monkeys.
rabbit.
No, not until July 1st, Carol. Sorry.
All right, guys, have a great weekend. That's going to do it for our cross-platform coverage. Our shortened holiday trading week feels like it was a full week. Our cross-platform coverage, radio, TV, YouTube, and Bloomberg Originals. We will see you again, same time, same place on Monday. And we want to start specifically with Amazon, already the everything store. Now it wants to offer up mobile phone services to its Prime members, according to those in the know, although there's been some other reporting saying, wait a minute, this isn't happening. Let's get to it, though, on this Bloomberg exclusive. Bloomberg News telecom reporter Scott Moritz here in our Bloomberg Interactive Brokers studio. And I think it was AT&T telling Dow Jones and Verizon it's not happening. Tell us what you know.
Yeah, well, what we know, what we reported, was that Amazon has been exploring a way to get some mobile perks to its Prime members, probably through what they called a Prime wireless offer, a very cheap price. To get that cheap price, they'd have to negotiate with the 3 large carriers, 4 if you can include Dish, for some really low wholesale rates.
Whose stock just shot up like a rocket today.
Well, because what else do they have to do?
All right. Well, yeah, this would be a good thing for them.
It would definitely benefit Dish if this came through for them, yes.
But Amazon has said, we're not planning on offering that now. Is it likely that Amazon and even Walmart get into this in the future? I mean, is this something that's going to... We saw, for example, I always think of Ryan Reynolds.
Yep.
He started up a mobile phone service company that essentially does the same thing, right? They buy cheap wholesale minutes or whatever and then sell it to consumers. Mint Mobile, and they sold it for like $1.5 billion, right? So if Ryan Reynolds can do it, certainly Andy Jassy can do it too.
Yeah, it's a common move in wireless to have a brand on top of someone else's service. Mint was actually T-Mobile's service. They got so popular, T-Mobile bought it for $1.5 billion. That's an amazing price that they paid for their own wholesale customer. But yeah, this MVNO, it's called, Mobile Virtual Network Operator approach, have been very popular in Europe. It's helped knock down a lot of the pricing from the traditional carriers there, and that has not been a good thing for investors in those main carriers.
How likely is this going to happen? It's not the first time that we've seen a foray, right, by Amazon into a mobile service offering.
Right. As we reported, it's been going on. The discussion's been going on for months. It's complicated because setting up a mobile business has some implications like tax and customer service, and then you have to get the FTC or the FCC involved. And so there are some complications, some hurdles. We say in the story it could take months or not even happen at all. And I know that there's a lot of sentiment right now today, especially that it wouldn't make sense for the carriers to do it. But we are talking about billions in wholesale revenue that's at stake here, and Amazon being the big buyer could shop that around. If they got an offer from one of the carriers, they could take it to another, and it would just kind of knock down the price to a point where Amazon might be happy enough to offer it.
How can Dish be a player in this? I thought they just sold like the NFL package. What are they doing in wireless services in the mobile phone world?
Right. Well, Dish is investing $10 billion in building its own wireless network using its own spectrum that it's been acquiring over the last 2 decades now. It's a long shot for sure. It's a very expensive project, and they're running out of money. They're going to need a new refinancing at some point next year just to stay afloat. But what Dish does have is the beginnings of a network. They've covered 70% of the U.S. market, and they are hoping to get to 100% sometime in the next year or two. And they have this kind of lightweight network, as they describe it. It doesn't have a lot of the old equipment that's kind of expensive. This is kind of lightweight in terms of software run and cheaper to operate, and it would be a kind of a challenger to the others.
Scott, last question. I mean, Amazon gets its hands into a lot of different things, right? And as we said, that this isn't the first time that they've played around, certainly in this area. Having said that, for you guys to put this out, right? I'm just curious, what kind of conviction do you feel like, okay, maybe the timing isn't quite right, but it's going to probably be something we see in a year or so from Amazon, or maybe longer, maybe shorter?
Hard to predict, right? We do say in the story there's some risks. We do say that they have been, I mean, even Amazon admitted, we are exploring ways to bring more perks to customers. What could be more sticky than a mobile plan? You get rid of your Verizon service and you take on Prime wireless. But again, it will depend on how low the prices go on wholesale and whether it's worthwhile to Amazon.
You don't make too much of the pushback?
Well, yesterday they weren't pushing back. They were just not commenting today. When one of the press people said, as if one of them denies it, we have to deny it or else we'll stick out.
Interesting. I gotta love how this works. Scott, thank you so much. Scott Moritz, telecom reporter on that Bloomberg exclusive, joining us in studio. All right, now let's get to the exclusive on Apple, which was by Mark Gurman, our Bloomberg News chief technology correspondent. His story on Apple about the company's planning a deeper push into China and India. It's all about a retail expansion. So let's get to it with Bloomberg News senior tech editor Nick Turner. He's joining us right now. Hey, Nick, tell us about kind of the crux of this story, the retail expansion. What exactly and how big is it?
Yeah, I mean, it's pretty big. It's going to span more than 50 stores. Essentially, it's an expansion in Asia and a little bit of an expansion in the U.S. and Europe, but more of that is just kind of overhauling or in some cases relocating stores in the U.S. and Europe to just kind of nicer locations or bigger, just kind of making sure they have more amenities. So it's kind of sprucing up the stores that already exist and adding some new stores, mostly in Asia.
So India, is that like, the land of the rising sun for Apple? I mean, they've started moving some manufacturing there as well.
Yeah, so India's really interesting for them right now because, their overall sales, as you may know, have been falling. And a lot of that's just because their mature markets just aren't growing at all. And they really played up India on their last earnings call as a big place for them. And emerging markets in general as kind of the future growth story for Apple. For now, it's still, as a market, it's not anywhere near, like, say, a China or certainly a U.S. or Europe. And they just opened 2 stores so far in India. And again, the stores are not necessarily the biggest sales drivers. They do sort of signal to the world, hey, this is an important place for us if we have an Apple store there.
Right.
So opening a bunch more in India will kind of make even more of a statement that that's an important spot for them.
Currently have 520 stores in 26 countries, roughly half of them located in the United States, and they are going to open up more stores in China, so it's not like they're turning their back completely. How important, how does it move the numbers on the balance sheet for Apple, these retail stores?
Yeah, it's definitely the minority of their sales coming in from the actual stores. They're kind of big, like, let's say there's an iPhone launch and people go, wait in line for it. Obviously, they have a big day that day. They're, in terms of going in to have your phone repaired and, getting customer support, they're important for that. And they've also been pushing these classes where you can go in and learn, how to do things on your Mac or your phone. And hopefully that keeps you loyal to the brand.
So the exciting stuff that people really want to hear about is the goggles or the glasses, right? Meta came out just ahead of the Worldwide Developer Conference with a cheap version of a mixed reality headset. What's Apple going to come out with next week?
Well, so the Meta one is $500, and there's an even cheaper model that they have, so you can even go downscale a little bit. The Apple one is expected to be $3,000, which, I mean, they're entering a pretty new market that is kind of untested. A lot of folks aren't super excited about, putting on goggles and going into virtual worlds.
I mean, I am excited if they're Apple, right?
Well, the hope is that 2 things, I guess. Apple does it really well, and then 2, this is the gateway to something bigger down the road.
Yeah, we've talked about that in depth with also Mark Gurman about it. Hey, listen, Nick, thank you so much. Really appreciate it.
Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long at Bloomberg. 6 weeks of gains in a row for the NASDAQ Composite Index. The Dow, the S&P, and NASDAQ all rallying today with a stock melt-up, driving the S&P 500 to the brink of a bull market. Today, the S&P rallied 61 points, heading into the weekend at 4282, a gain of 1.5%, and extending its year-to-date run now to 11.5%. The Dow today up 701 points, up 2.1%. NASDAQ up 139 points, up today by 1.1%. 10-year yield 3.69%, with the 2-year 4.49%. Gold 19.48 the ounce, down 1.5%. West Texas Intermediate crude up 2.6%, 71.92 a barrel. Labor actions have disrupted work at several key West Coast port terminals, all of which are part of protracted negotiations for a new contract for dock workers. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Matt Miller, live here on Bloomberg Business Week. And I don't know if you saw this, Matt. Interesting story. It was about Coinbase Global, which is the largest U.S. digital asset exchange, saying the intersection of AI, artificial intelligence, and crypto represents an important opportunity for entrepreneurs, including helping to prevent some of the excesses cited by critics of the technology. That, to me, is interesting.
Yeah, no, I think it's absolutely fascinating. The intersection between blockchain technology or distributed ledger technology and artificial intelligence is something that we focus on Bloomberg Crypto, which is every Tuesday at 1 p.m. on Bloomberg Television.
Shameless promo.
Yeah.
But all right, so let's get into it with our guest. Jack O'Halloran is co-founder and CEO of Scale Labs. He joins us on Zoom from San Francisco. Jack, also co-founder of Actana, I hope I'm saying it correctly, co-founder of Incent Align, and has held some executive positions at companies like Good Technology and Motorola. Jack, nice to have you here. Talk to us about blockchain and AI. What's the potential?
Yeah, pleasure to be here today. So, hey, I think we're at the very early stages of what will be perhaps the most transformational technology movement of the last 20 years. We're already seeing impact today, and I think, we're still in the early days.
Well, what do you mean specifically? That's big and broad. Drill down.
So,
what does that mean?
So diving in a little deeper, I think the headlines are always about this amazing intersection where we have artificially intelligent bots that are making purchase decisions for us, that are managing our wallets, that are, this fully connected AI and blockchain ecosystem. But today, what's happening is the first immediate impact is that applications are actually being developed, Web3 applications in particular, at an alarmingly fast rate with the help of AI. So it's actually AI is playing a role in blockchain development at the application level, at the infrastructure level, at the QA level. So blockchain devs are using AI to build applications faster. So my sense of what I'm seeing is we'll have at least a 10x growth in applications built in the Web3 space, thanks to the support and help of AI. So that's the first piece, and happy to kind of go into the other pieces as well.
Well, I just wonder, who's using these applications? Because I was looking, for example, recently at the Solana phone, and it's got all of these, decentralized apps on it, but I just don't know what I would do with all this stuff. It's like we have this technology looking for a problem to solve. I get what you can do with cryptocurrency, and I love the idea of trustless, decentralized currency, but I just don't understand, who's using the applications, the other applications that we put on the blockchain yet.
Yeah, and you know what? You're calling out that is the elephant in the room. That is the problem that we at Scale are working on solving every single day. And for example, I worked in mobile back in 2005, 2006, 2007, 2008, and I have to tell you, the amount of applications utilized was just, sparse. The device speeds were horrible, the UX was horrible, the battery life, the compute power. All of a sudden in 2010, you had millions of people simultaneously playing each other in games across the world on mobile. And we're at one of those moments, I believe, in Web3 where right now, there's some phenomenal use cases out there, but the UX is horrible. The transaction costs are high. the access points and accessibility, you have to be an engineer to use a lot of these applications. And so within the Ethereum ecosystem in particular, there's just been some, I think, some amazing pushes on the UX level that are going to make these apps easier to use. Because to your point, we are not seeing the actual throughput in users. And it's in large part the similar gating issue we had in mobile.
By the way, talk to us for a moment about scale, because what you guys are doing is addressing a real problem in the Ethereum ecosystem, which is gas fees that are out of control, right?
Yeah, exactly. And I think it kind of like, it goes back to your point earlier, where if you build applications with really cool use cases, but they're incredibly cumbersome to use, they're incredibly expensive to use, who's going to use them? Well, the answer is the same people that use Web3 apps today, and it's probably like 10,000 developers. And so Scale is set out to build it's almost a Web 2-like business model where application developers are able to pay in advance for the gas fees and then take the burden off the end user for the fees. It also creates better unit economics. It also creates for faster processing, faster blockchain execution. So our goal at the end of the day is to open up Web3 to normal users and help application developers actually fulfill these big promises and hype that we've been reading about.
So is it all developers that are on Scale at this point? Who is using it, or who's on it?
Yeah, so the largest use case, which is probably not a surprise to people in terms of actual end users, are games. So games are a phenomenal early use case for any technology. I mentioned earlier mobile, and the first, and I worked at Good Technology, and we had 92 of the top 100 Fortune 100 companies as customers. And you know what? The only application anyone even used was email. And everyone remembers those days. But we're going through a similar thing here in blockchain, where games are the leading frontier because it makes a lot of sense, and they can operate on the back end. It fits the profile and the social demographics of the users. And the next phase, from my view, are Web3 social applications that are disrupting this whole creator economy space and content space, and we're just seeing a lot of growth there as well. But the developers utilize Scale, to your question, to create applications and to run applications faster. But at the end of the day, we all want to service the end user.
It's funny. I don't know, Jack, if you're familiar with the Bloomberg terminal, but you can do so much. It's mind-boggling what you can do with this terminal, and the most used function, of course, is message. Like, email is the killer app here. Let's get back to AI for a minute, because I think it's really interesting that we see OpenAI doing well, and there's clearly going to be a battle between the biggest players to see whose model can learn the most. But you are looking forward to a decentralized AI model, and I wonder if that somehow takes the danger out of it. Alex Karp from Palantir the other day said, man, the products we make are so powerful, I don't even know if we should be selling them, which I thought was pretty interesting. Is a decentralized AI going to solve a lot of those issues?
It is, but my personal feeling is that we're going to see the actual trustless decentralization come later. And the first piece will be, seeing Web3 applications where you actually have the power and benefits of AI in terms of automation and help and writing and recommendations and conversation, connecting with, NFT gating and in programmable currencies and smart contracts. And then, eventually we're going to get to this point where people are saying, hey, well, why are we again trusting the world's 3 largest companies to essentially make 90% of the decisions that are made on the internet? And that's when you're going to start seeing those models start living in a more open source, transparent, trustless manner, and seeing that kind of like ultimate nirvana of blockchain and AI synergy. But it's still a ways off, frankly.
I'm thinking of people, me, who are listening, and just, normal people, regular people who maybe aren't as enmeshed in this world or the, blockchain world. So how does it practically impact us potentially, the stuff that you're talking about, the integration of AI and blockchain?
Yeah, so let's look at, I think, a good use case. Let's look at music, for example. So let's say there's a decentralized music platform, and right now, artists that put music on iTunes or Spotify get a very low fraction of return, and there's lots of, middlemen, hands in the way. There are these decentralized music platforms that are popping up where actually artists directly submit music. People pay in still small increments, but instead of 10% of their payment going to artists, 90% is going, and the other piece is going to the community. Well, that's a cool Web3 application, but the way AI would intersect is all of a sudden you're getting conversational input in terms of what you should listen to, how you should listen to it. Artists are creating music faster, better, more specific, more tailored to certain audiences, and AI is really a creation tool. And so you're going to see both artists and it's a creation and curation tool. So you're going to start seeing the kind of, I guess, symphony of these end results come together, where people are going to start, we're going to start creating more things faster and for more specific audiences, and with programmable money, without less middlemen. That's one example of where, and hopefully you don't need an engineering degree to use that application, which is where we need to get to.
So today I was coming to work and I asked Apple Music to play me a radio station that was centered around Black Sabbath. So I wanted to hear stuff that wasn't Black Sabbath, because I've heard all of it a million times, but like Black Sabbath. And then I realized that Apple Music is just selling me with this radio station what it wants me to hear that's like Black Sabbath. So if I had something decentralized, I could hear true Black Sabbath-esque metal.
Yeah, and you look at all the drama in our Twitter feeds and our social feeds around who's in control of those algorithms. Well, eventually those are going to be all large language model algorithms that are super smart and intelligent. But who's in control? Who's managing my political view? Guess what? You will be able to, and
we got to run. Jack, thank you so much. Have a great weekend. Jack O'Halloran, co-founder, CEO of Scale Labs. All right, off to World and National News, and Nancy Lyons out in D.C. Hey, Nance.
Thanks, Carol. We'll hear from President Biden tonight on the resolution of the debt ceiling crisis. He'll speak at 7 p.m. Wall Street time. The Senate approved the deal late last night, and Center for Politics Director Larry Sabato says it's a relief for everyone.
This crisis is over. It wasn't a real crisis. It was a manufactured crisis. But if the debt ceiling hadn't been lifted, then we would have had an economic disaster. So in that sense, it's a great triumph.
Larry Sabato leads the Center for Politics at the University of Virginia. The search for victims in a partially collapsed building in Davenport, Iowa is now over. Authorities say it's now a recovery mission. 3 people remain unaccounted for. Well, crews are on the scene of another partial building collapse, this time in New Haven, Connecticut. Mayor Justin Elliker says 7 people were injured during construction work at the site.
As they were pouring concrete, a portion of the second floor collapsed onto the first floor and then into the basement.
Mayor Elliker says the property is owned by Yale and is being developed into a 7-story residential building. The FDA says at least 11 cancer drugs appear to be in short supply, forcing doctors to decide which patients get treatment. Now Congress is getting involved.
Senate Judiciary Committee Chair Dick Durbin is calling for the FDA's immediate action to address shortages of critical cancer drugs like carboplatin and cisplatin. Durbin sent a letter to FDA Commissioner Robert Califf saying the agency should use its authority to allow for the safe importation of those drugs from other countries and work with manufacturers to extend the expiration dates. The American Cancer Society issued a warning last month that chemotherapy drugs had returned to the list of the top 5 drug classes affected by shortages. In Washington, I'm Amy Morris, Bloomberg Radio.
Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long at Bloomberg. Another weekly move higher for the S&P 500 index. 3 in a row right now for the S&P. It was 6 in a row for the NASDAQ Composite Index. The relentless rally in big tech, options positioning, and bets on a Fed pause following today's mixed jobs report put stocks on the verge of a bull market. The S&P right now heads into the weekend at 4282, up 61 points today, a gain of 1.5%. The Dow up 701, up 2.1%. NASDAQ up 139 points today, up by 1.1%. 10-year yield 3.69%. The 2-year 4.50%. Could not ignore the Russell 2000 today. It surged 3.6%. As for the market backdrop and the Federal Reserve, Brenda O'Connor-Wanis is financial advisor at UBS Global Wealth Management, and she was a guest right here on Bloomberg Business Week.
The Fed has done an incredibly good job in prepping the market this week. They have really informed the market in a way to let them know that June is going to be paused. And so I think investors looking at today's payrolls numbers were less interested in knowing what the June guidance was going to be because the Fed did its own communicating.
You can hear more of that conversation on the Bloomberg Business Week podcast. You can download it wherever you get your podcasts. Spot gold today fell at $29 the ounce, down 1.5% to $19.48. A big move higher today for West Texas Intermediate crude, up 2.6%, $71.96 a barrel. So again, recapping, the Dow, the S&P, and NASDAQ all surged today. S&P up 61, a gain of 1.5%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thanks very much. Charlie Pellet there with your Bloomberg Business Flash. Matt Miller here in the Interactive Broker Studio with Carol Masser. I'm filling in for Tim Stenovec as my summer job. And
you did a big interview today.
It was great. I came in this morning and I called over to Huntington Beach, California, where Volkswagen is introducing its ID Buzz, this electric version of its iconic bus, right? Which we've been waiting for I think about 10 years it's been since they teased the first one. I talked to the North American CEO, Pablo Desi, and of course I wanted to know all about the car and its capabilities and everything, but I had to ask him first about the jobs number because we just came off of that, and Volkswagen is indeed hiring here in the U.S., adding to non-farm payrolls. Listen to what he had to say.
We have that payroll number. So we just hired 50 people in Tennessee in our manufacturing facility. We have right now over 6,000 employees in the state of Tennessee. And this growth is aligned with the numbers that I just gave you, right? If we increase our sales numbers on the 84, and we started production of 0 vehicles in last year, and we ramped it up to 7,000 vehicles produced in the state of Tennessee in the last month. So I think this is only the start of our beginning in the U.S. market.
Pablo, of course, you've got to manufacture to meet demand, but in the past couple of years, there have been other things holding manufacturing back, specifically supply chain issues and chips. How are you doing right now in terms of your supply chain?
Significantly better, Matt. Our production has grown 26% year over year, which is a huge achievement by our team. And not only that, Matt, we are the only automaker that qualifies for the Inflation Reduction Act for the $7,500 credit. So what that means is that our team, has been able to realize the jobs, the innovation, the battery, all within the U.S. And that's a huge achievement for our team.
Do you still have pricing power? You know, prices have gone up substantially across the industry over the last few years. Is there still so much demand that you can essentially charge what you like?
I think demand continues to be strong. As I mentioned, the industry is growing 9%. The cost of the raw materials, particularly on the electric space, are coming down. You've seen what happened on commodity prices, particularly on lithium, 30% versus the highs from last year. So I think that will accommodate, and supply and demand will be more normalized in the next couple of years.
How are you sourcing things like lithium? A lot of automakers are kind of vertically integrating for nickel, aluminum, and other materials necessary for electric vehicles. Copper also key. How are you sourcing for all of those things?
So first of all, today we are one of the few that has battery production within the U.S., but we're taking it a step further. We just announced PowerCo, which is one of our companies, and we're going to be sourcing all the minerals, producing all the cells, and then doing all the manufacturing here in the U.S. So this will be a completely packaged. Next couple of years will be 100% sourced out of the North American region.
Let me ask you finally about the dealership network. How does that look right now? And Pablo, do you grow a dealership network like the typical American franchise network, or do you start selling direct to consumer with these electric vehicles?
We have a great dialogue. Actually, our dealer network council is right here, right now, and we have great conversations. We will continue partnerships with them at VW.
Is there, though, more online purchasing that you're seeing? Are customers doing a lot more online with Volkswagen as well?
They are. So we have different programs, particularly on the digital space, that can be started by VW and or with the dealer network. But there is one tool that is integrated in partnership with the dealer network. So these digital tools are even more relevant, and we have an aggressive plan of implementing these tools in the next couple of years.
All right, so that was Pablo Deci, the North American CEO of Volkswagen, talking about their ID Buzz. That's the new electric bus that they'll be selling.
That's so cool.
Next year. It's
iconic
pretty cool.
In the 60s, right?
Absolutely.
Everywhere.
And, this is what they set out to do, make a modern version of the T1, the original Volkswagen bus. Personally, my preference is for the T3.
What's
That's
the difference?
like the late 70s, early 80s version that had the squared off headlights and sort of chunkier.
I'll have to look at it.
But
How much
nonetheless.
what's it going to cost? Did he say?
He didn't say. You know what? I probably should have asked him what it's going to cost, but I think it's going to be affordable compared to a lot of the other new products out. Cars have gotten so incredibly expensive.
Well, that's why I was curious, like what it's going to come out at, because I could see a lot of certainly younger folks really into it. You said your mom might be.
My mom is definitely ready. She's been waiting to buy one for a decade. So she's going to be very excited to be able to get a hold of one. They won't be delivered until next year, and they'll be 2025 models. Okay, Car and Driver says they're going to start around $40,000, but they're going to have one version with a single motor and rear-wheel drive, and then they'll have a dual-motor all-wheel drive version.
You follow this stuff like left and right. It just feels like everybody and anybody is throwing more and more stuff that's got some kind of EV. That's actually an EV, right? There's more and more stuff coming out.
Yeah,
we just continue to
exactly.
See it.
We're still in the first generation of EVs, so I'm waiting to pull the trigger personally until we get to the next generation, because not only will they be better vehicles built specifically for electric propulsion, but I think the price is going to come down substantially as more players enter the market.
Yeah, I mean, I think that's what everybody's waiting for. Same like with us, we've looked and we're just kind of blown away by the prices of stuff and just feel like, okay, we're just going to wait a little bit more we're a little longer.
When more competition comes in this market, those prices are going to drop. I mean, think about the fact that now you can basically only buy, you can buy an econo box, you can buy a luxury sedan, or you can buy a pickup truck, right? If you want an EV.
Choices.
But you'll be able to get what Americans really need is a 3-row SUV, right? So you can put all your stuff, your kids and your dog in the car, and you want it to have good range and be able to charge quickly.
Do hybrids even sell anymore?
It's weird,
Because I see them on the street.
There are hybrids. I mean, my wife has a hybrid, a Volvo that she's absolutely in love with.
Yeah.
I love the hybrid, the BMW hybrid X5 that they have. For me, it just makes me feel a lot better having the option of a gasoline motor in case I run out of charge and don't feel like waiting an hour and a half to, to fill up. But for some reason, car makers are just going, I think it's regulations. They're just going straight for the full 100% battery electric vehicles. And they're not even offering range extenders, which BMW did at the start with their i3. And I thought it was a brilliant idea. They made an EV for the city, but they put a little 3-cylinder range extender in it. And I thought it was great.
All right. Well, okay. Do you think this was great, too? No, you said you liked the other one.
Oh, I mean, I think it's fantastic. I prefer a slightly different model, but I would take one, yeah.
You would take one. All right. Hey, listen, if you missed any of it, head to Bloomberg.com or check it out on the Bloomberg terminal. I'm assuming Matt's interview will be there.
It's there already.
All right. Good to know. Good to know. Carol Master, Matt Miller, you're listening and watching Bloomberg Business Week on Bloomberg Radio.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Sources tell Bloomberg 3M has struck a tentative settlement of at least $10 billion with a host of cities and towns across the country to resolve water pollution claims tied to so-called forever chemicals that the company was making for decades. 3M shares rallied today by 8.75%. Sources tell Bloomberg Amazon.com has been talking with wireless carriers about offering low-cost or possibly free nationwide mobile phone service to Prime subscribers. And with more on that story, here's Bloomberg's Leslie Lotto.
Charlie, the company's negotiating with Verizon Communications, T-Mobile, and Dish Network to get the lowest possible wholesale prices. Sources say that would let it offer Prime members wireless plans for $10 a month or possibly free and bolster loyalty among its biggest spending customers. They say the talks have been going on for 6 to 8 weeks and have also included AT&T at times, but the plan may take several more months to launch and could be scrapped. Charlie?
And that's Leslie Lotto reporting today. We had Amazon shares up by 1.2%. T-Mobile shares, they declined 5.6%. Verizon shares up 1% today, while Dish Network Corp surged 16.2%. After earnings, Lululemon Athletica up today by 11.3%. After earnings last night, Broadcom up 2.8%. After earnings, Dell Technologies up 4%. Those are some of the company stories we're following this hour, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
All right, everybody. We're going to have more on Business Week in just a moment, but right now, let's get a check on world and national news. Off to Nancy Lyons we go in D.C. Hey, Nance.
Thanks, Carol. President Biden will be addressing the nation tonight on the economy following the debt ceiling compromise. He might also address today's jobs report that showed an unexpected addition of 339,000 jobs. Bloomberg's Irv Chapman has more on the administration's response.
The continued job growth was welcomed at the White House, as Heather Boucher of the Council of Economic Advisors underscored in a Bloomberg interview.
This has been an economy that's been able to weather a variety of shocks over the past couple of years, and this labor market has remained strong. This is a great report. There's a lot of strength in the labor market. That's certainly benefiting families all across the country.
Boucher also noted the improved number of working-age adults entering the labor force, as the ratio of employed women equaled the previous high. In Washington, Irv Chapman, Bloomberg Radio.
Secretary of State Antony Blinken says Russian President Vladimir Putin made a major miscalculation when he invaded Ukraine.
Ukraine will never be Russia. Ukraine stands sovereign, independent, firmly in control of its own destiny. In this, Putin's primary goal, he has failed most spectacularly.
Speaking in Helsinki today before NATO foreign ministers, Blinken said a ceasefire that simply freezes current lines in place would, quote, legitimize Putin's land grab. He said it would, again, quoting here, reward the aggressor and punish the victim. In Singapore, Pentagon Chief Lloyd Austin and his Chinese counterpart Li Shangfu are among more than 600 military leaders, policymakers, and analysts from 40 nations taking part in the annual Shangri-La Dialogue. The U.S. says Beijing has ruled out a meeting between the two military chiefs, with China frustrated that the Biden administration has not removed sanctions the U.S. placed on Li in 2018. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Carol and Matt.
All right, Nance, thank you so much. Coming up on our weekend broadcast and podcast, a name very familiar to our audience. We're talking about Goldman Sachs CEO David Solomon, who owns not one but two summer camps, and we know we wanted to know more. We talked to Bloomberg News senior finance reporter Sri Natarajan and Bloomberg Business Week editor Joel Weber. Matt Mead.
Well, he went to Camp Robin Hood in the lovely town of Freedom, New Hampshire, and it certainly helped him grow into the human being that he's today, made him very successful. He's now the CEO of Goldman Sachs, but it was also the place where he was frequently known as Saul, and when David Solomon became a DJ, the first time around, he went with the moniker DJ D-Sol. Unfortunately, that was too kitschy for who he is now, so he rebranded. He's now DJ David Solomon, way more boring, but DJ D-Sol does trace its roots back to Freedom, New Hampshire.
Oh, so he got that name at summer camp. That's pretty cool.
Still the Saul
there, right?
part of it.
Yeah.
The DJ came much later.
I mean, it's pretty clear from Solomon how you get that.
Yeah, I know.
But he wasn't the first person in this family to go to that camp either, right?
Right. His father, his uncle were there before him. Then he went there. Then his daughters went there. So clearly there is a lot of sentimental value to Camp Robin Hood. And this was back in 2004 when he became a co-owner of that camp. This was well known when he became the CEO of Goldman Sachs in 2018. But what was not well known, hopefully much more well known now that the story is out, is last year he expanded his portfolio of summer camp ownership. He bought into another camp which has one for boys, one for girls in Kent, Connecticut, with as a part of a consortium of investors